Hey everybody, Marty Mazur. Good afternoon, March 1st. Quick commentary for you. Huge day in the market today. Dow up over 300 points. Unlike yesterday, when oil and high yield bonds rallied and stocks didn't, today it was what you would have expected. So you had the mountain chart, which is oil, the yellow line, which is high yield bonds, and then the purple line, which is stocks. Well, that made sense. That's what you should expect based on how the market's been trading the past few weeks. In terms of why, problem here, in terms of why, well, yesterday I tried to explain the market going the opposite direction based on fear over the Fed raising interest rates because of better inflation numbers, et cetera. So this morning's rally made sense when William Dudley was very dovish and essentially implied that at least he, as a voting member, is not interested in voting for higher interest rates anytime soon. So that I think is a good excuse for the market to have rallied this morning. But when the economic data started coming in noticeably better than expected, that should have brought that Fed fear back on the table if you believed yesterday's story. And the market just kind of caught steam and continued to go higher. Well, a couple of things. Number one, like yesterday, it was a relatively low volume day. So that even though the market went up in a big way, it was on relatively low volume, which means there wasn't like this massive rush of buyers, although there was a real source of buyers, I think, that I'll tell you about in a second, but it wasn't massive. So sellers, weren't inclined to give up their stocks at yesterday's prices, so stocks got bid quite a bit higher. So relatively low volume, so that means, unfortunately or fortunately, depending on which way you want the market to move, not anything to write home about in that respect. Plus, as I'm sure I mentioned recently, short interest has been very high. In fact, the last reading tied the 52-week high. So that means a lot of folks are in this market betting that it's going to go down. They do that by borrowing shares, selling them, and expecting to replace those shares later by buying them back at lower prices. When stocks begin to go up, they panic because if stocks go too high above from the level they sold them, they can lose a phenomenal amount of money. So when shorts are worried that the market's going to leave them behind to the upside, they have to close those positions by buying stocks. That buying just exacerbates the push higher. So over the years, I've told you when there's been high short interest to look for days where we have multiple hundred point gains on the Dow. This, I think, was one of those days. Just because, though, it's a short covering rally, a lot of people say, don't pay any attention to it. It's just a short covering rally. Well, coming off of, correction lows, which is kind of what we're doing, that's how rallies always begin. Because there's such high short interest, you get those big boosts because of shorts covering. So I don't discount that as readily as other people do, but I do think it's something we need to understand, probably explains a lot of what happened today. From a technical standpoint, I've been showing you these charts. Yesterday we closed down here, and I said that was a poor technical sign because we couldn't hold this blue line of support. Well, we just shot right through that this morning, I think, on Dudley's commentary, and then as I suggested, just continued to push higher. Well, we went all the way back up to this level, the 62% retracement level, against my natural resistance line that I drew a few days ago. So this would be some technical resistance. It'll be interesting to see if that does prove to hold in tomorrow's trading. So folks, not that you should look at this as anything that's actionable, but again, it's just me trying to help you explain some of the factors at play that create for these very volatile days. So I could go on and I could talk about the breadth of the market. I could talk about Super Tuesday and how that may impact stocks. Apparently there's some bullishness. That's nothing I've ever studied. I'm not that interested in studying it, but the story goes that if Super Tuesday emerges with clear victors in terms of the nominees, the market tends to like that because it offers up some certainty regardless of the presumed market friendliness of the candidate. So we'll leave that one there. We'll talk about that when the results come in maybe and see how the market reacts to that over the next few days. But clearly, as we get closer to the election, that's going to have to be more of a topic of conversation in terms of what it does to market volatility. But as I said last week, I'm constructive on stocks right here. If you're a long-term investor, I think you feel pretty good about these valuations, although they're not as attractive as they were down here, let's say, particularly since earnings estimates have been ratcheted lower. But valuations don't scare me at this point. If the economy continues to improve, the earnings outlook is going to get better. If businesses continue to spend on capital, like the last week's numbers for durable goods suggest they are, that also looks better for productivity gains. And so, I can make a pretty good case for the market. I do think it's going to be a very nervous year. It would not surprise me to see us make new lows. Doesn't matter if you're a long-term investor, but if you're getting a lot of stuff from the media like we always do, I want to come in, at least a few times a week and help you put the short term into perspective. Thanks, folks, as always, for watching and listening, and I'll talk to you very soon.